Namaste and good morning. Welcome to the Solar Aane Daily Brief, your daily dose of business news that matters. I'm your host Karan Mehta, and today is Friday, April 17th, 2026. A week bookended by warfare's closes on a calmer note, but the numbers tell a more complicated story. Let's get into it. First, today's top headlines. The Sensex rallied 504 points to close at 78,493, with the Nifty reclaiming 24,353 as hopes of a US-Iran ceasefire lifted FMCG, banking, and power stocks. The IMF's Fresh World Economic Outlook has pushed India down to the sixth largest economy globally, behind the UK and Japan, even though we are still growing faster than any other major economy. And the Reserve Bank of India is auctioning off 2 lakh crore rupees in a 7-day variable rate reverse repo today, mopping up surplus liquidity from a banking system awash with cash. Now let's take a deeper look at the IMF story, because it matters more than the ranking suggests. According to the IMF's April World Economic Outlook, India's nominal GDP in 2026 will be 4.15 trillion US dollars. The United Kingdom, at 426 trillion, and Japan, at 438 trillion, have leapfrogged us. But here is the thing. India's economy actually grew around 9% in rupee terms. The ranking slipped for two reasons. One, the rupee has weakened from 84.6 per dollar in 2024 to 88.5 last year and is still hovering in the low 90s this week. That compresses our GDP when translated into dollars. Two, the Ministry of Statistics quietly shifted the GDP base year from 2011 to 12 to 2022 to 23 in February, and the new series is about 4% lower than the old one. So, the rank change is a statistical event, not an economic one. But it does matter for sentiment and foreign investor perception. The IMF expects India to reclaim the fifth spot by 2027 with a projected $4.58 trillion economy. The deeper lesson for business owners: when you hear a headline number, always check whether the change is from real growth, a currency swing, or a definition change. They are not the same thing. Moving on to the markets and the rupee, today's rally came on softer crude de-escalation hopes and quite simply oversold conditions after a bruising fortnight. 5 stocks, Reliance, HUL, HDFC Bank, SBI, and ICICI, did most of the heavy lifting. The rupee strengthened to around 92.50 per dollar intraday, recovering from a 3-week low of 93.40 just on Wednesday. For Indian exporters, especially smaller engineering and textile units billing in dollars, this whipsaw is brutal. Your quote from Monday may already be underwater by Friday. If you are exporting, please hedge your forex exposure. Do not carry open dollar receivables beyond 30 days in this environment. Next, a compliance corner every MSME must hear. The new GST Zero Mismatch Policy is now live from April 1st. If the invoices in your GSTR3B do not match what your supplier has uploaded in your GSTR2B, the portal will block your return filing until the mismatch is fixed. On top of that, e-invoicing is now mandatory for any GSTIN with annual turnover above 5 crore rupees. Earlier, the threshold was much higher. Practical takeaway: reconcile 2A and 2B with your books weekly, not monthly. And chase your suppliers to upload invoices on time, because their delay is now your problem. Your input tax credit, and therefore your cash flow, depends on it. On the MSME finance front, 2 important signals. Gold loans have surged 128% to nearly 4 lakh crore rupees, partly because gold itself is now at 15,220 rupees per gram for 24 carat, an all-time record. Many small business owners are using gold-backed credit as bridge funding. It is fast, collateral-backed, and cheaper than most unsecured lines. But remember RBI's rule: there is no automatic rollover after 1 year. Plan the exit before you take the loan. And on the rural side, wheat procurement for this season could fall 69% according to trade estimates, as unseasonal rains have delayed mandi arrivals. That means slower cash flow for farmers and, by extension, softer rural FMCG and two-wheeler demand in the June quarter. Brace for it. So what does all this mean if you are running a business in India today? 3 takeaways. 1. Sentiment is swinging weakly. Do not bet your quarter on any single week of market action. 2. Compliance has quietly become a balance sheet issue. the Zero Mismatch Policy can freeze your working capital overnight. 3. Rural demand is the quiet risk this summer. If you sell into Tier 3 or Tier 4 markets, lean your inventory conservatively until monsoon and procurement data stabilize. That's your SolaAne.com daily brief for today. If you're thinking about buying or selling a business, head over to SolaAne.com, that's 16ane.com, where we make business deals Sola An Pakka. Have a productive weekend, and we'll see you Monday.